All right, everyone, you are welcome back to my YouTube channel. Right, how are you doing today? If you're a new subscriber and if you're a new viewer, right, I will want you to do me a favor. Please kindly subscribe to this YouTube channel. Right, please help me to subscribe to this YouTube channel because by doing so, you are ensuring that our community is really growing and many people tends to see what we are doing. All right. Just like what we said last 2 weeks, right? This week is a week that I'm going to announce the winner. I mean, the person, the lucky winner that will receive the sum of $100, right? And this would be announced during the course of the week, right? I'm going to make another video, right, which is going to be an episode 2 of how to use an order block, right, and follow the institutional order flow. All right, today I have a very interesting thing to talk to you about, right, which is how to use a trend line, right? How to use a trend line. And we all know that there are various ways of how people have actually trade the institutional style of trading, how to follow the liquidity providers, as the case may be, right? But you know that basically it is actually us retail traders that have we've actually categorized ourselves to into two ways, right? We call some institutional trading style and we call some other guys retail traders. But I want to really, based on my own opinion, I just believe that everybody is actually retail traders. If you're not a bank, you're just a retail trader, right? It's just you don't really have that fund, you don't have billions of dollars to trade, then you just categorize yourself under that particular niche, right? I believe there are different style of trading, different ways to actually trade the market, which trend line is also part of it. All right, and many people have actually they have been trading this particular trading method, which is actually trading trend line. I've seen some of them; they are extremely profitable, and I've also seen people in quotes that actually call themselves smart money traders, institutional trading style. In fact, people that are trading my method is not every one of them that are really profitable. So I believe I'm of the opinion or belief system that there is those trading strategy that is really so bad that wouldn't really make you to be profitable. I believe that if you can really manage your psychology, which I believe is a major part of trading, you will really be profitable in trading. But this in this video, I have a very interesting thing to really talk to you about, how I use Trendline to search for liquidity. So basically it is actually liquidity I really want to teach, and I'm going to tag this as liquidity one, I mean episode 1, because I still have some other interesting ways to spot liquidities in the market. So basically I use Trendline, all right, as the case maybe we have a bullish trend line, right, we have bearish trend line, right. I use trend line basically to spot liquidity. I'm not going to trade, basically if retail traders really want to trade, let me just use that niche as people will always call them, right. I'm also a retail trader, right, even though I trade alongside with a bank and follow institutional order flow. I don't have billions of dollars to really trade, so I just categorize myself under that particular niche, and not even a bank. So I don't really have a FX broker, right? Or I'm actually controlling a pool of the market. So basically, my lot size and my bias in the market doesn't control the market. I just spot what the banks are doing, what the institutional are actually doing for me to follow them. So that's why I actually have to categorize myself under a trader, even though I'm trading an institutional way. All right. So as you can see, retail traders will be looking for a bounce on a trend line. It's just to come to think of it, there's actually one of my students that made that particular statement, that how can you just think that an ordinary line could actually hold a price? As funny as that actually sound, right, it is actually the truth. But at the same time, it's not that we real traders are really expecting markets to really bounce off a trend line and they are using that trend line as a basic way to really trade. But based on the pattern of the market and based on the behavior of the market, they would have actually studied it and see, okay, if price will come back to this particular zone, maybe the first time go up, then come back the second time, then maybe break structure again, then when coming back right, they are expecting it to actually hold, then price should also continue to go higher. So basically, this is going to be the mindset of many traders in how to use um, uh, a trend line. So let me just quickly draw that and let's see how we can just explain this for you to understand. Just like what I've said, this particular content, this particular video is basically on how to spot liquidity in the market. So I use trend line and I use lines to determine where retail traders will be buying from, where retail traders will be selling from, for me to determine where to buy. Just like what I said, I'm a retail trader also, but I trade in an institutional way. So I'm going to use this the perspective or the opinion or the view of the market as a retailer or as a retail trader, for me to know where many people will be buying. So I'm not going to be buying from there. I will just allow the market to actually stop, hunt them out, or to take out the liquidity before I'm going to trade. So basically, let's say we have something like this. When you're trading trend line, the basic rule of trend line is after market has actually touched. Okay, let's start it this way, right? Market has been going higher, maybe coming lower, lower low, lower high, lower low, lower high, lower low. Then where we lower high, higher low, higher high, higher low, higher high. Now, based on the rules of trend line that I've seen on how it has actually been used, because I've studied around this line, I've seen how many people actually use that trend line. So basically, if you want to use trend line, you will want at least 2 points to be met, right? Let's say from this particular area, all right, from this particular area to this particular area, we want to use that. Okay, right, from this particular area to this particular area. So I'm going to adjust that very well now, right? So this is the opinion of many traders when they're actually trading trend line. So the expectation is that as market has actually come back here to break structure here, when we have a break of market structure here, just like how they would have actually used it, we have break of market structure here. Now they are expecting the third retest of that particular zone to happen, and this is where many of them will be buying. Now, will this particular system works? I've seen it work so many times, right? After the first touch, the second touch, then the third touch is where they are willing to buy from. They are willing to buy this market from. And if you actually look at it, now I'm going to show you examples where this actually works, but this is not how I'm trading. Now, basically, there is one of my students that actually came and also told me that this is what he's using to trade in line with our method. And what he's using for this to do is anytime price actually pull back to this, the third time, then we'll be looking for maybe an order blocks or any of our rejection zone beside this zone for him to actually be trading from here. It's fantastic, but I will not do it that way. I will use trend line to spot liquidity in the market. And basically, when I see this particular area, I'm not going to trade until market actually, let me delete this out, until market actually took broke through this particular line. On a normal day, if this particular trend line is broken, do you know what many people will be thinking, right? Many of them, right, they would have been thinking, oh, this trend line has been violated, and they are willing to sell. And how is that done? I'm going to show you that now. Now, basically, when we have a trend line like this, right, and market came, maybe we have the first touch, break market structure, the second touch, let's say a break market structure again. So if market actually came and break through this area, do you know where traders will be willing to buy? They are willing to buy, they are willing to sell at the retest of this particular zone, and they are willing to continue down. Now, will this system also work out for you to sell this particular market? Fantastic. It is actually very true that sometimes, right, this really works, but this is not how I'm going to trade the market. Basically, just like what I told you, look at my first drawing here. It is when this trend line has been violated, then I will look for another block below this particular area for me to continue with that particular direction. So basically, market has already broken this particular trend line, and many retail traders, they will be willing to, just like what I have here. Many of them, they're already selling from here, and do you know where their stop loss is really above this area? Their stop loss will be above this area. They are putting their stop loss here. Let me use the short position, right? They are willing to sell here. right, willing to sell here. Their stop loss is above this area, and they want to target maybe any low, or maybe 1 to 2, 1 to 3, or 1 to 4, as the case may be. That's really what they are looking for. But I've already seen liquidity. Why? Because many of them that are buying from this area, they already put their stop loss here. I'm going to explain this so that you can actually understand that better. Now, look at this. Let me clear all this. Now, I'm going to use this as an example. Now, they spot this part, the first low, the second low, rejecting on a trap zone, or let's say a trend line. So when market actually is pulling back to these, they already see a rejection zone, their candlestick reversal pattern, and they are buying from here. Do you know where they're going to put their stop loss? Let me delete this first. Then let's do this. Right. So the first one, we have the first low, right? Break structure. The second low, break structure. Do you know where they will be willing to buy from? Immediately price pull back, right, to this particular area. Price is retracing back, and price gets to this area. Then we begin to see a a candlestick reversal pattern that is painting in this particular area. Do you know what they are going to do? They are willing to buy this market from here. So buying this market from here, the stop loss is below this area, and the target, they can actually target this high. So that is what they're going to do. Now, what I'm going to do in this market, I'm not going to trade this week. Now, I want to see market break structure and break this particular trend line. So their stop loss is here. Market should really come back to take them out. So when this particular area is stopped out, now let me use the part drawing tool to draw this. Now, market already broke through this area, as you can see that. Now, where are they willing to sell from again? And market is now approaching this area, as you can see. Now, what do you think they are going to do? What do you think they are going to do in here? So they are willing to start selling. Now, let me draw that again. Price broke structure. We test this particular area. They are willing to sell in that particular area. So what will they do again? They will put their entry here again, the stop loss here again, right? And they are willing to do what? To target this low, or any liquidity zone, or any structural zone for them to target that. Now, they are stopped out here. But basically, if I have already established my institutional order flow, I've already determined where the market is going, I'm sure that this particular sell will not hold. In fact, market will also use this particular zone to serve as a liquidity zone before market will just continue to go higher. So my expectation is just for me to see market to just continue to go higher. Even, in fact, their stop loss are already been taken. Now, the first stop loss here, the second stop loss here. And you know what? They will just give up and just say that the forex market is not working. Why? Because you are trying to catch a trade in a way that you are not expected to really catch it. Just like what I said, this particular system of trading in the retail style actually works. But I am not willing to actually sell this market or buy this market with this particular area. So what I have used for myself is to use Trendline, right, to spot liquidity where retail traders are willing to buy or where they are willing to sell for me to continue to trade. So very quickly, because I don't really want this particular video to be a very long one, so let me delete all this, right? Just delete this, right? So look at this. Price has already broken market structure here, as price actually went up, right? Came back to break structure, but I'm very sure what I'm really looking for is when price has actually broken this particular trend line. Many people that are buying here, they would have been stopped out, right? Many that are buying here, they would have been stopped out, right? And at the same time, when this has broken this particular trend line, many will be willing to sell from this area too, and their stop loss will be here. So stop loss hit here, another stop loss hit here. So this is what we're going to use as liquidity to push this market lower. Don't forget the fact of liquidity. Your stop loss is always seen when you are selling, right? When you are selling, let me put this here. When you are selling, let's say you are selling this market around this area, don't forget, liquidity providers will see your stop loss as a buy stop, right? Your stop loss will be seen as a buy stop. And when you are buying, your stop loss will be seen as a sell stop. So that is a liquidity. Now, sell stop means the area at which you are willing to sell. Buy stop means the area at which you are willing to buy. Don't forget, market works based on liquidity. So, and based on the idea of the market, every investor and every trader are willing to buy at a very cheaper price and to sell at a very expensive price. So if your stop loss on a buying trade is a sell stop, that implies that you are willing to sell, to sell your market at a very cheaper price. Don't forget, if I am an investor, I'm willing to also look for people that are going to sell to me at a very cheaper price. That implies that I want to buy at a cheaper price. Then if you are a seller, it implies that you are willing to sell your price at a very expensive price. Right? You are willing to sell your price at a very expensive price. And don't forget, as an investor too, I'm willing to sell to an individual at a very expensive price. So all these things must be understood. Just like what I said, this particular sell stop, for a selling trade, your stop loss is a buy stop. That implies that you are willing to buy, right, at a very expensive price. And as a trader, as an investor, I'm willing to sell to you at a very expensive price. So this is how liquidity really works. Don't forget, I've already said it earlier. If you don't understand this, you just need to study this many times. And I'm going to make much more videos on liquidities and how liquidities really works. But this is basically for trend lines and how to follow trend lines how to use trend lines to spot liquidities in the market, where traders are willing to buy and where they are willing to sell. So that is what we're going to capitalize on for us to follow the direction of the banks or the liquidity providers or the composite operators. As you can see, so this is basically how the traders works. Don't forget, just like what I said, this particular area that you see here, we have sell stop here, which is your stop loss. So that implies you are willing to sell at a very cheaper price. And as a trader, I'm willing to buy at a cheaper price. But you are willing to sell at a cheaper price. So what the bank will do is that they are looking for those people that are willing to sell at a very cheaper price, and they will come to buy from you. Right. So if you are selling, your stop loss, just like what I said, your stop loss is also a buy stop. So your buy stop means you are willing to sell or you are willing to buy back at a very expensive price. And as a bank or liquidity providers, I'm willing to sell at a very expensive price. So I will come back to this particular area to sell to you. So that is how price will come back and actually come to activate your stop loss. Right, your stop loss will be activated and you just see your trade will just walk in your direction. In this one also, your stop loss will be activated, price will walk in your direction. Why? Because they are pushing the market lower for them to really grab those liquidities, for them to buy at a very cheaper price or to sell at a very expensive price before market will just continue to go higher. So this is how I use trend line, and this is the mindset I have when I'm trading, when I see trend line in the market. So very quickly, let's see some examples of the trade I took this week for you before we just continue. So the first one I'm going to show you is going to be on GU. So I'm going to show you how I have actually followed this particular principle to trade GU this very week. So let me show you the first one, which was GU, and we're going to continue from there. Now this was my trade. As you can see, this was a before trade. Now this is a trend line. As you can see, what is happening here is a trend line, right? This is a lower high and this is also a lower high, so it is not actually equivalent to each other. So that is where I believe there is a lot of liquidities there, and you can see what I did. I was expecting market to pull back. Now let me just show you on the chart. As you can see, this was my before chart, right? So I have already seen that there is a zone that has not been retested here, which is what I called my LC. This is the last candle. I was expecting price to really come back to this area, right? But at the same time, I have already spot liquidities in the market by using the trend line. As you can see, using this trend line, I have market going lower. Now, based on as a retail trader, just like what I said, this is the first eye, this is the second eye. So where am I willing to sell as a retail traders? Right, I am willing to sell when market actually pull back to this area. In fact, when I see market rejection, I'm willing to put my stop my entry here, my stop loss above this high, as you can see. So that implies that this particular stop loss that I already put here, it is a zone that I am willing to buy this particular market back. So that shows I am willing to buy this particular market at a very expensive price. In my mind, I'm actually selling at a very expensive price. So I now suggest to myself that if this market actually break through this area and come to this particular invalidation point, then the market should close me at a buy. So that is actually what a stop loss really means. Don't forget, I'm going to make much more video on this. I just want to explain Trendline for me to continue in that direction. So what did I do here? When I spot that, a whole lot of traders will have actually been willing to sell this particular market when price is coming back for a third retouch. So what did I do? I already spot a very good zone, a fair value gap here, and my LC that actually follows how I spot other blocks in the market. So this is the reason why I have actually made this particular area my entry point. Don't forget, I refined this particular area. I refined this particular area in the lower time frame. I'm not going to do that in this particular video. I refined that particular area, as you can see, the before chart where I was taking an entry from. Right. So I refined this. I'm not going to do that on this particular video, as you can see. So that is where my entry was. I catch an entry from here. Right. My stop loss was this. Right. My entry was this area. Then I was targeting this particular liquidity zone. That was what I was targeting. As you can see, that's about 1 to 21 risk reward ratio. 1 to 21 risk reward ratio. As you can see, this was the aftermath of that trade. Then moreover, just like what I taught you, when price actually pulled back after taking out liquidity into a rejection zone, what are you willing to see? You want to go to lower time frame to confirm your trade. But I did not do that here. There's a system at which I did I'm really here to review that, how I really spot a precision zone that market really reverse from. So after price took out this liquidity, price came back to that zone. Many people would have actually been selling here. In fact, many people that are trading smart money, institutional trading, they would have actually been selling here also, because this particular one also took out liquidity, price breakdown, and this particular area broke this particular structure. We have another structural break here. All right, we have another structural break here. Many people that have actually been following that, they are willing to sell at this particular area. So I've already seen that eye as a liquidity zone that market will really invest. The liquidity providers will invest their money to really come back there before they will short that position. So I have 2 trades in this particular trade. So one was here, as you can see, then the other one was this area. Though I took a lower time frame entry here. So I'm going to quickly show you how I took that lower time frame entry. I've already showed you the before chart. This was my before chart. So the after chart, and this is really what you can see here. And this was the after chart. By the time I was still marking this, right, this was the after chart. As you can see, I have already posted some on my Telegram channel. You can see that and actually trade from there. So we have one that is running here. This stop loss was here. Right, and this was where I put this stop loss. As you can see, this was the aftermath as price was still running, right, about 1 to 8 risk reward ratio, as the case may be. So this is really what I have here. Now, how did I take a lower time frame entry when price actually pulled back to this area? So that's what I'm going to show you quickly, because I've already been explaining that over and over again. So I can really show you how price would have actually done that. So let's quickly go into that zone. So when price actually come back to this, we have this one running already. So let me delete this and just use the replay button. I've already shown you the before chart. So by the time price actually pull back to this area, this is 4-hour time frame. So you can as well go to 15 minutes time frame and 10 minutes time frame, or 10 minutes time frame for you to get that entry. So let's see when price will pull back to this. Let me go to 1-hour time frame just to estimate up. All right. So price is already on our rejection zone, as you can see that. So let's go to 10 minutes time frame and see what 10 minutes time frame has to give us. So we are expecting price to give us entry. So by the time price actually pulled back down, I really did not have any entry to take on this trade. By the time I saw this is actually like a breaker pattern. Price actually broke down, right, break this structure, then price came back, retest this particular block back. So this is the zone I was willing to sell from. This particular zone was where I was willing to sell from. 15 minutes time frame more actually. All right, so we can see that better. All right, this particular zone. So before price will come back to this, what I was willing to see before I'm going to put my pending order here is that price should really give me a liquidity zone, right? I really want to trade liquidity, and I'm going to show you how that happened. Then price pull back to it, take out that liquidity here, then price should really break down. So that is my expectations on this particular trade. So let's just see how this really play out. My entry was here. You know, I'm ready on a particular trade on the higher time frame that is running. I'm going to show you that, and this was another trade that I am expecting. Let me go to 1 hour time frame so that we can just make this to be very fast. So do we have a liquidity zone there? Yeah. Go back to 15 minutes time frame. Do we have a liquidity zone? Yes, liquidity was taken before then, and moreover, we can also spot a trend line stuff here. All right, this is another one here. As you can see that, then price also came back, right? Price came back and actually get to that rejection zone. Then we have the entry, just like the same pattern. So moreover, this particular trade can now run to our 4-hour rejection zone. So let me pull this back. All right, so this is where I'm targeting that I want to 26 risk reward ratio, as the case may be, just like what you can see it. Now another one was here that was running. It's actually one of my trade I took. Another one was here, which was the first one I showed to you. Then another one was here, right, which was the main target. So I have about 4 in this particular system, but just permit me, I'm going to show you 2 because of our time, so that I will not just waste your time. But I believe that the message has been passed. So this was what I was waiting for and waiting to see, right? So as you can see, we have about 1 to 26 risk reward ratio met here, 1 to 6, 1 to 8 risk reward ratio met here. Then this one also 1 to 25. So 1 to 26, 1 to 25, that's about 50 something RRs. Then is about 1 to 65 risk reward ratio on this same trade, just following that pattern alone. As you can see, that is just very interesting way for you to trade. When you spot liquidities, just trade. No, you know, this just like our system actually was is called, right? It's liquidity providers concept. So I don't really want to trade without liquidity being met. Now this is a trade in my mentorship, and if you really want to know how to trade this, right, you can apply to mentorship, and for you to learn much more, right? We have a mentorship pro, which is about $550. Then we have a special class, which is basically a very, very good one, right, which is about $2,500. That is not really very, very important. It's just for people that can really afford it. But if you cannot afford it too, right, that is why I'm making this particular content for you, so that you can actually see my thought process, why I'm actually marking the market, and what I'm really expecting in the market. So this is the first one. So let's go to another, right, which is actually the second one. I'm actually going to go on from there. So I'm just going to explain USD/JPY, right? This was a before chart. As you can see, you see the trend line I already marked, and this was a zone I was also expecting to take entry from. Now I have many of these. Now if you really want to study that, all this particular trade has been posted to my Telegram channel, so you can join my Telegram channel for you to have access to all this, so that you can really study it and be good. So USD/JPY, let's quickly go there. 4 hours time frame again. 4 hours time frame. So what did I see in the market? So let me quickly just cut this short. Before then, let me cancel this, right, and delete this, right? So the first one, right, when I got to the market, this was already what I saw, right? Let's say price was actually painting in this manner. So what did I see? I saw that this particular rejection zone is a very good one for me. So I already marked this particular rejection zone. That was where I was expecting price to really come back to. So at the same time, I can see what price action is doing. We have the first low, just like what I told you. The first is always after the second hit. This first low, the second low, that's where we're going to put our trend line. Can you see that? So, you know, basically, just like what I've already explained, many day traders, they are expecting price to come back into this particular zone, right, before they are going to buy. So their stop loss is where? Their stop loss is where? Their stop loss is below this area. They are willing to buy here when price actually pull back to this zone, having rejected. So they are willing to buy from here. I mean, immediately price also break structure, they are willing to sell from there too. So they are willing to buy from here. Maybe their target is there. Many of them don't even target this high, but they are willing to target maybe 1 to 3 or 1 to so. But that is not what I target. The minimum the minimum target I look for in the market is 1 to 10. But most of the time I see 1 to 20, 1 to 30, as the case may be. But my minimum is really 1 to 10 before I break even or just target the next liquidity zone. So basically, this is what retail traders will be looking for in the market. Just like what I said, I'm also a retail traders, but I just use this particular concept for me to know where the banks will really be stopping people out and follow direction of the market. So basically, when I see a rejection zone, right, on other blocks that I've already taught you, these other blocks engulfed as an impulsive move, right, but really it doesn't really break structure. But I know on the lower time frame it usually break structure. So what did I see in this market? I was willing to buy. I'm actually looking for a buying opportunity, and this is also based on my higher time frame direction. The higher time frame direction that I'm using for 4-hour time frame is telling me that price should really go up, and I'm actually seeing that price is really compressing here or is moving in a ranging manner. So I spot trend line. Don't forget how to use the trend line. Is always after the second low. So the first low, the second low, so we're expecting the third low, and if price breaks through this particular area, retail traders will be willing to sell at the rate test of this and continue to go down. But that's really not what I'm willing to do in this particular trade. So what am I looking for? Just like the entry that I've already spot here, right? We have all this particular style that you can actually look out for in here. Now, so I put my trend line here. There's a way I really refine that. There's a way I refine that for me to get this kind of entry. There's actually a way I refine that. I'm not willing to share that here, but I'm going to tell you later on. So the first entry we are looking for a buy was on this particular zone because I'm expecting markets to really break through this area. My target, I'm expecting to target this high. Then the second one, in case price did not really come that far, based on my refinement, right, I'm also willing to sell, to buy from this area. I'm willing to buy from this area and also target high, as you can see, to target this high. So let's see what price will have done, right, on 4-hour time frame. I'm going to show you how I took the lower time frame also. So you can see price actually came to this area. Basically, when price is retesting this particular area, what do you think retail traders will have been doing? Now they are willing to sell from this area. So stop loss is already hit. Now if you are buying from this area, your stop loss is what? Your stop loss has been taken out because you are willing to buy from here at the retest of that particular zone. What will have actually happened? Your stop loss would have been, right, would have been taken out. Then you are also willing to sell when price also come back to this area. Then you will see I'm already a buyer. I'm already buying this pair when this particular liquidity zone or this particular trend line has been taken. So let me just put my the money sign there, right? So no, it's supposed to be below. Supposed to be below, right? So I'm already a buyer on this particular trade, and don't forget I also have a 10 minutes time frame entry on this particular trade. Let me quickly go to 10 minutes time frame entry. So let's see how this actually play out. There's one of my students that asked me how this actually play out. I'm going to show you that. So this form, I want price to actually give me pattern. So price action has been broken here, as you can see what happened. So I'm willing to be a seller here. As you can see, this was the aftermath of that particular trade that I marked here. This particular zone was refined into lower time frame entry, and that's really what I have here. It was refined into a lower time frame entry, and that is what I have here. So let's see how this really play out. And just like what we have here, I refined it into this particular zone on the lower time frame. I'm not really willing to do that here because of my time, right? And that is where I'm willing to buy this market from. I want to buy this market from this area entry here, right? So let's see how this actually play out. I'm going to show you the trend line stuff that also happened on this particular trade. So let's go. Right, so we would have actually gotten the under trend line here. This is actually a first low. Let me use this, the first low, the second low, right? Many people would have actually, let's see where they would have been buying. This actually breaks structure. So where do you think they will be buying? They'll be buying on this particular area, right? They'll be buying when price actually pull back to this area. right? That's really where they are willing to buy and they want to continue to go higher. But let's see what eventually happened. Let's see what eventually happened. Price break through that area, came back to activate our trade here. Came back to activate our trade here. This is actually the entry point. This is our stop loss, right? Came back to activate our trade here. As you can see, all right, let me just put this stop loss here. Right, as you can see, now this trend line was broken. Price came back, actually invested all the money here to come back to this area. So let's see what happened. Then price just continued to go higher. Now let's go to 1 hour time frame just to see. Now this is about 1 to 12. I think I catch about 1 to 19 on this trade. The before chart, 1 to 19 risk reward ratio, as you can see before you know it. Now let's go to 1 hour time frame and just exchange it up. So prices continue to go higher, continue to go higher. In fact, at the end of the week, you will actually see what really happened. Now let's go back to 4 hour time frame and just play all this to the end. All right. Now, you know, basically when price also come back to this particular area, retesting this area, many people would have also been selling. Retail traders, they are willing to sell at this particular area, right? Don't forget that. Maybe their stop loss is here. They would have been stopped out again on that particular trade. But that is what I'm investing on. That is what I'm really going to trade for me to have a very good, effective trade. So we have our first trade here that is running up. Right, let's see the aftermath of that at the end of the week. And we have another one here, which should be 1 to 9. Right, at the end of the week, we already have 1 to 5 risk reward ratio, and this one is not really. This is actually very little, 1 to 2, but it's still okay because you've already taken profit. But the major one is for you to, after price pull back to your rejection zone, which is actually the best entry you can really get, is for you to go to lower time frame for you to get confirmations, and with that you'll be able to get the best out of this market. So let's go to lower time frame again. Where is that entry? All right, lower time frame. This is our entry. Stop loss here. This is our entry. So you can target the higher time frame. Let's see at the end of the week what do we have. At the end of the week, what do we have? At the end of the week, we have about 1 to 24 risk reward ratio. So just calculate it. This is 1 to 5. 1 to 24, that's about 1 to 29, right? Then 1 to 2, that's about 1 to 31 on the single trade. Don't forget, on GU trade, we have about 1 to 60 something risk reward ratio there. As many of you don't actually think that, oh, if you're actually trading like this, then will have actually become maybe the worst, worst trade or whatever major institutional trading company that you can actually tag me to be. But really, I'm only trading, and also I'm using 0.25 of my account size to on a particular trade. So I'm risking 0.25 on a particular trade. I'm not even risking up to 1% of my account. So it's just on in the particular week when I know that, oh, maybe I might not really be available to trade, just to trade 1 or 2 setup, then I will really be using maybe 0.5, or I hardly use 1% because of my account size, right, on a particular trade, you know. So that's really what I do on a daily basis. All right, guys, if you really get value from this particular video, I want you to click on the like button. Please like this particular video, and don't forget, if you are a new subscriber and if you have gotten value from this particular content, make sure you also subscribe, and don't forget, follow me on Instagram. Right, we have it displayed on this screen, and also on Telegram channel. This is where I post all my trade. Don't forget, I only post trade after they have actually happened. I don't really give signals. I don't give direction, as many people have actually asking me. But very soon, maybe I've already promised, maybe next month, once in a week, I'm going to be posting at least 2 setups that I'm actually looking at for you to also follow me. If it's going to be a loss, then you have to enjoy that loss. And if it's a profit, then you have to enjoy the profit. Now, the reason why I don't give signals is because of my own emotion. I don't really like feeling people, right? I don't really like when I trade, when I send a particular trade and people actually tends to lose on it. Even though I'm very profitable, but at the same time, I don't know the one I'm going to send out, if that will be profitable or it will not go, it's not going to be profitable. If that particular trade will go to loss, or it will go to profit. So that's why I don't really post that. But very soon, maybe next month, the month of October, I will be posting that. So if you really want to enjoy all those particular benefits in line with the chart I'm posting every day, follow me on Instagram and also on my Telegram channel. Don't forget, our mentorship class is open, so you will do well to also join our mentorship class. This is where you're going to get the main source, right? We do trainings almost every week, right, for us to look at charts and for us to know what really is going on in the market. And this is to ensure that you become a very successful trader. All right, guys, until next time, I'm going to see you.